Well, hello everyone. You get me this week for your weekly update, Stephanie Fullerton here at Fullerton Financial. And I'm sure, like Steve and I, Sunday over the weekend, waking up Monday, we're feeling a little angst about all the information. Uh, let's talk about the elephant in the room. Let's talk about Silicon Valley Bank and how that was seized by the regulators due to its insolvency. Now, I think it's important for us to understand. Let's think about why did this happen. So, number one, tech activity dropped off. So what happens is these depositors, they lean on these banks for funds. The bank had its deposits tied up in low yielding treasuries, which basically were worthless now thanks to the higher tax rates. The banks tried to raise cash by selling stock. That did not go well. In fact, it had to sell some of its treasuries at a loss. Remember what happened. Treasuries were bought a few years ago at a lower rate. Now the treasuries had gone up, and now what happens? You can't sell old treasuries at a lower rate when you can buy them at a higher rate. So what happens is that it creates a loss of confidence, followed by a run on deposits, and then that's how the banks fail. So what happened is that the FDIC, understand this, the FDIC will insure deposits up to $250,000. 90% of the bank customers had more than that. So what happens is the government had to step in, they had to waive the deposit caps, so now all the depositors will be able to get their money, and the tech companies can now pay their bills. So over the weekend, we also heard this. Signature Bank in New York was also seized. Depositors were made well whole again there as well, so keep that in mind. So should we be concerned about our bank deposits? We don't think this is indicative of a large bank event. However, I think it's always a great reminder to regularly review your banking situation, especially if you're keeping deposits over $250,000. I think markets are going to remain rough as this such situation unfolds. I think we could see financial stocks, they could take a little beating over the next few weeks. And with the latest inflation numbers scheduled to be released this week, that also could add to volatility. And let's not forget that the Fed is scheduled to meet on I think it's March 21st and 22nd. We could see new interest rates be added, and that's always a concern for these markets. So here's the good news. That's why we're here. We're here to help walk you through volatility. We have put together strategies and plans that help balance out when the markets are crazy like this. We thank you for leaning into us. We thank you for putting your confidence and your trust in us. And our goal here at Fullerton Financial is to stand by your side, to walk through this storm, and to help give you confidence in your retirement. Don't forget, we're always here. Give us a call. We're here to answer questions. We have an incredible team that is always ready to take the phone and schedule an appointment and sit down with you. We look forward to next week talking to you soon. Make it a great weekend.